You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, ever-scary, probably these days a little bit for you, the Options Insider Radio Network. You guys know how to get us Mondays and Thursdays on the Option Block, of course, every other day throughout the week for other shows, and Friday, 1 o'clock Central, 2 p.m. Eastern, for a little thing I like to call Volatility Views. A lot of vol to talk about today, so it should be an interesting one. Of course, get those questions, those comments, those insights, and we do love to hear from you guys. And joining me on the old program today, first off, he hasn't been with us in a little while. In fact, it's been about a decade since he last joined us. Holding down the MIAX hot seat today, we have Mr. John SMOLLEN, the Executive Vice President and the Head of Exchange Traded Products over there at MIAX. John, welcome back to Volatility Views. Happy New Year, and indeed, Happy New Decade to you, sir.
Yes, sir. Thank you, Mark, and everyone. Happy New Year. Excited to be here. Always good to jump on the old show when the market's moving.
Yeah, it's certainly moving today. Doesn't seem like a decade since the last time we talked, does it, John?
No, it feels like a couple weeks.
A couple of weeks, that's it. And also joining us from parts unknown, a.k.a. Sydney, where we are joined once again by the CEO over there at T3 Index, the Spikes father himself, Mr. Simon Ho. Simon, welcome back to the program, to you as well, sir.
Thank you, and good afternoon. And from what I recall, I believe last week, maybe I might have won the guessing competition, if I'm not mistaken.
Well, if by one you mean you were the closest when we were all still like 3 handles off. Yeah, I don't think there were. we didn't really declare any winners last. When we're beyond like a point, I usually don't declare any victors, and we were all 2 to 3 points away. Technically, you were the closest, but I think it was. I'll have to check and make sure. I think we settled out somewhere around a 15 handle last week, and you were in a 12 handle, I believe. So if you want to take that as a victory, I will allow it, sir, maybe a moral victory. But here, under the strict rules of the crystal ball, sir, that is not a victory.
Fair enough.
If you want to see how it's done, look to the week before, where I guessed both VIX and spikes to within about 0.01 of each other. That's what we take as a victory, sir. Let's look at that for some spiritual inspiration. How's that sound?
Understood. Sounds like a fair rule.
Spoiler alert, I don't think any of us are going to be that close this week either, as we continue to see some serious vol unfold in the marketplace. And joining us last but not least, he is the greasiest of meatballs, Mr. Mark Sebastian, joining us from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program, to you as well.
Hey, good to be here. I'm excited. Happy to be on. I didn't realize it was going to be like I didn't realize it was actually be a panel of all-stars today, but it is. You got John Smollen, one of the top 300 most famous SIBO option traders ever. You've got Simon Ho, who is, again, maybe one of the 1,000 most famous traders in all of Australia. And then you've got me, who is, obviously needs no introduction. And, of course, the Longonator, Mark Longo, joining us, who's created his own fame by creating his own network. So, it's a super famous panel today.
Yes. Interesting barometers for fame you've chosen for all of us, sir. With those various demarcations in place, let's keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do exactly that. We review the volatility trades and trends and unusual activity and developments and all that good stuff that's been unfolding over the course of the past week and continues to unfold today. Oh, what a week it has been. Last week we were trying to measure and gauge whether this concern, these pandemic fears, really had legs to them, or if it was going to be like any other event we've seen over the course of the past couple of years, where we'll see a little bit of a blip in volatility, then it gets faded pretty instantly. We saw that with the trade war many times. We saw it earlier this year, this month even, with the Mideast crisis there and the Iranian general being taken out, a bunch of other things. That volatility was faded pretty quickly, and it was an open question whether that would be the case right now or whether this would have some legs. And the week started off with a little bit of concern, selling off, seemed like it might have some legs. Then, of course, micro burst in on the macro scene, and we saw some amazing earnings out of some big names, Apple, Tesla, Amazon last night, all just blowing the doors off things. So that seemed to allay some concerns, mitigate some fears, and as soon as we sold off, we turned right around and rallied yet again. And now coming into the latter portion of the week here, we're back on the, hey, things are bad again tip, as most of the major indices are pretty firmly in the red. The S&P off about exactly 1.5%. Dow threatening 2%, off about 1.75% right now. And NASDAQ mitigated a little bit, like I said, by those aforementioned Amazon earnings, only off about 1.2%. So if it wasn't for these nice micro considerations, we might be seeing a lot more blood red out there in NASDAQ as well. Crude oil, WTI, listen to Twifo from yesterday. We talked about that quite a bit. Had some market makers joining us. WTI continues its death spiral, shy of the 52 handle right now, down to 51 and about a quarter. And gold, of course, ticking up, but still not quite above that 1600 level, which is fascinating in and of itself. Moving on to the vol space, of course, our old friend Spikes and indeed VIX Cash, both kind of moving in lockstep right now, both right around that 19 to 19 and a quarter range. That puts them up both nearly 4 handles from last week, about 3 3/4 to 4 points, kind of depending on where you're looking. Vol firmly up from last week. I do believe Matt was the most bullish on volatility from all of us last week, and even he didn't guess that high. He's about 5 handles away right here. So, spoiler alert, no winners again. This shows how tough it is to predict vol when pandemics are afoot, listeners. It's an interesting environment we find ourselves in right now. Of course, all this vol on the screen, all this movement of volatility means the VVIX, a.k.a. the vol of vol, has been moving as well, continues to grow, continues to get frothy, back in those triple-digit land of actually up to 105 right now. Puts it up about 7.5 handles from last show. So things are moving. Things are happening. Things are popping off. It's time to get into it. Let's go back to the MIAX hot seat. John, you haven't been on with us in a while. We'll get to the status because people want to know about it. We'll get to the status of what's going on with the futures in a little bit. But as Mark alluded to at the top of the show, you kind of cut your teeth in the space as a market maker. I'm kind of curious here as we're kicking off the new year. This is your first appearance of the new decade. What are your thoughts of where we find ourselves right now, just from a broad volatility regime spectrum? Is your market making sense? It's like you ride a bike, and you never lose it, right? So is your market making sense right now? Is it telling you that we're perhaps headed for a little bit of a new vol regime, or is this going to be maybe like one of the myriad of other blips we've seen out there, John?
No, as a top 300 SIBO market maker of my lifetime.
That's great. Top 300. I love it.
It's going to be on my business card. I actually think that, what I'm seeing as, again, this is just going back to a live previous to MIAX, because you asked, you see a lot of stocks that are reaching the absolute extremes of their performance and what they're able to do. And I think that the market, I think it's interesting. You had a couple of things going on here. You've got, it's obviously, it's Friday, a big earnings week, a lot of good things coming out, and then you've got the pandemic problem coming out of China. There's just a lot of the reasons to continue to own stock. Today's as good as any as to, it's like, hey, I've had a great run here. I know we're backed off, but we could go into a zone here where you just see a lot of the only direction's really down, and it's just like I said, it's just looking at it historically about how I used to trade a lot of macro stuff when I managed our books, and I would look at things like that and say, you know what, what's my motivation here? And the motivation is, okay, now's maybe a good time to get out. And then on top of that, you have Friday, and you've got this thing going on overseas, and then you've got the impeachment thing we're going on here, because I think I don't know if there's any delta been put into anyone's really put that as much as maybe it should. I think that puts probably undervalued. What if the guy loses? What happens to the market? So you've got 5 or 6 things that give you a lot of reasons just to get out of the market.
Well, speaking without getting too deep in politics, the other question is, we do have the Iowa caucus coming up next week, and I think that if you talk to a lot of bankers, they are quietly a little nervous that the nomination is going to go to Bernie Sanders or Elizabeth Warren, which freaks them out because they know that they will, those are two people who have made banking, traders, investors, private equity, anything that is involved in money movement in the marketplace. We've been the bad guy, right? So we could call ourselves the panel of Sanders Warren bad guys. But that I think is almost as big in terms of maybe adding a little bit of vol as the impeachment stuff, which you're right, nobody's putting a delta on. And then to John's point, you got to wonder whether this coronavirus thing is as much an excuse as it is a actual risk. If this was really a risk, would Disney be up when they're having to shut down Shanghai Disney? And would Apple be down 3.5% when they were up last week? So you gotta wonder whether this is as much the quote unquote MAGA stocks had gone so far so fast that the market just said, you know what, this looks like a perfectly good reason to push the red sell button. Maybe we do that. So I'm kind of with John on his analysis, and I know Simon's with me too.
You're still pushing that MAGA hat thing, are you?
You know what? Yes, I'm trying to figure out exactly what. Maybe I'll make it green. Be a green MAGA hat.
Clarify for our listeners who missed the last show what exactly you're talking about, sir, because it's not what they think.
It's Microsoft, Apple, Google, Amazon. And that at the time was in the order of, at the beginning of the year, the order of market cap. So that was where that comes from. And all I was saying is that's replaced FANG, because FANG is no more.
FANG is dead. Long live the MAGA hat that the Option Pit folks are putting out forthwith. I'm still looking forward to getting my hat here, so we could all wear it. Microsoft, Apple, Google, and Amazon, I believe, was the other one you had in there, which this week, good number of those popping off and putting up some good numbers. Simon, as our representative of the Asian Pacific region, but close, adjacent, you're on the rim there. What are your thoughts, first off, on just, everything we've seen? A lot has happened. A lot has unfolded since the last time you were even on the show a few weeks ago. A few weeks ago, we weren't talking about pandemic fears. We were kind of coming off the wake of all the Mideast tensions and perhaps seeing the end of the trade war volatility. Now, fast forward a few weeks, and we're in a completely different environment. We're talking about pandemics. I think John's got an interesting point, too, about people are really kind of writing off this impeachment, but there is a potential, as small as it might be, there is a probability, a delta, that the president could no longer be the president in a little bit. So there's a lot of shoes out there that are kind of waiting to drop. What are your thoughts on this somewhat rarefied volatility environment we find ourselves in right now, Simon?
Yeah, well, I mean, it's certainly very interesting because, one of the problems as a volatility trader is that the last few years in particular has been pretty benign, right? You haven't had a whole lot of things to try and hang your hat on in terms of positions. And then when you did, the moves that happened often took place too quickly. I mean, recently, we had a big spike, and then it came back down almost, 2 days later, which is kind of characteristic of this thing for many years, actually, since QE came out. So, yeah, look, I agree with both of my colleagues here, because I think that this coronavirus could potentially be a bit of a game changer. It seems to be speeding up. There's lots of concern about the veracity of some of the claims that are being made from China. A lot of people say that the infection rates are a lot worse than they let on, and so on. And you've had, it's fairly swift response. Russia has closed its 1,400-kilometer border with China, so has North Korea, for whatever that's worth. The UK stopped flights to and from China. So it's a pretty big deal, and it's going to impact commerce generally. Interestingly, in Australia, in their infinite wisdom, the government here has decided to keep planes flying to and from China. One might question whether or not that's a good thing to do or not, but the point is they're more concerned. We get to the heart of it here, which is the economics of all this. If you don't fly your planes, to and from China, which is a huge market for, say, the UK, that's going to have an impact on both BA, but also UK economy generally. So I think it's pretty interesting. And, as you mentioned, you've got the Iowa caucus coming up this week. That's very interesting. So there's a confluence of things that are coming together here that could really see some movement happen. I'm definitely on the side of preferring to be short at this point, the market, rather than long. And that's because, we've had so many years of unimpeded rallies in the stock market with virtually no pullback. And that just can't happen forever. I mean, I know a lot of people like us, Vol guys, have been saying that for quite some time, and people might get a bit bored of hearing it. But I think that you're right. There are so many issues in the market that are genuine here that any one of them could force a decent decline, I think.
Yeah, we're certainly perhaps on that precipice. Speaking of issues, let's get to them. We'll get to the futures. John, I'm glad you're with us because a lot of people have been asking us ever since November. Of course, the futures were with us very briefly, and then they weren't again for some behind-the-scenes machinations. It sounded like a little bit of a turf war between the different regulators over who should oversee the Spikes futures. A lot of people have been asking us since then. So give us an update, John. Where do we stand with the status of the Spikes futures?
It's a process. We're working with both our regulators. It's dialogue, everything kind of going on, and we'll be getting color from both of them soon, and hopefully we'll be able to have something to share. But we take our cues from them, and right now it's ongoing. But we're optimistic, and we think that we're getting the right people to look at the situation, and they're very good at what they do down there, and they have the best interests of everyone at heart, and our faith is in them coming to the right conclusion for the right reasons.
I know it's always hard to put a timeline on these things because they are fluid and things could change at the drop of a hat. But if you had to guesstimate right now, you think maybe by Q2 we might see the futures, maybe sooner or later? What's your spidey sense telling you?
If I was a top 100 trader at the SEBO, I'd probably know that number. But, it's going to work its way through. And when they tell us what that day is, the day we know, we'll let everyone know. And it'd be poor form to guess on things that I'm not qualified or capable of doing well.
I got to trap down some of those top 100 guys. They sound like they're the keys to all the information. I need to confer with Mark after the show and see who these mythical top 100 are. Meanwhile, let's get out to the other futures out there, the VIX futures. We're seeing, of course, the cash is backward right now. To the futures, I had a pretty hefty premium coming into the show, right around 0.75 of a point from the cash above that Feb future, again, showing how crazy and kind of topsy-turvy the markets are right now. We're seeing that mitigating a little bit. It's about 0.5 point right now, so coming in a little bit. Same deal out there to the March future. It was about 1 point below the cash. That's pretty much about the same, maybe about 0.9 points away. So the cash still juicy, still rich, still frothy out there. Also worth noting, October, as we talked about on last show, October still, coming to showtime, it was exactly 2 points above everything else around it. The SEP was at about 18.15, the October 20.15, and then back to almost 18.15, about 18.3 for the NOV future. So still seeing that nice little healthy blip out there for the election vol. Mark, we talked about it last week, how kind of crazy this term structure is right now. What are you and all your crazes in the pitch chat, what are you all making of this pretty crazy, a little backward environment we find ourselves in right now, sir?
Yeah, I mean, that we're finally getting an almost full inversion into backwardation. We've got the cash above the Feb above the March. March and April was really the spot where, April has been a little abnormally high. March is finally trading above April above May. So you now have cash above M1, above M2, above M3, above M4. And that is, if we pull in the Thompson twins, they will tell you that is and if we had a VIX spikes future, it would be very similar. The spike future / VIX futures in this formation, when they're in this formation, the circumstances in which market sell-offs become real. Market sell-offs turn, instead of being minor, can be extended. So the last time we saw this kind of formation, we were in kind of the August time frame, and that turned into a mess for an extended period of time. We now have that formation. So if you are asking yourself, well, what does this mean? This means that we don't necessarily have to have a crazy sell-off, but if we're going to have one, the circumstances are in place. This is similar to what you might hear as a tornado watch or a severe thunderstorm watch. There are real circumstances for something like that to occur. These are the periods of time where I start really adding on to my hedges and putting on hedges. So I have put on hedges here, and what I'll say is that we don't necessarily have to go down, but we absolutely could. And if we rally, the rally is not going to be a little rally. It is going to be a strong rally. We are in a line for some real market volatility, and it could be for a little bit. Again, some of these earnings really got extended. Apple's down 3.6%. It's down almost $12. And as much as that might be related to coronavirus, I think it's a lot more related to the fact that some of these valuations are rich, and the market is finally has a good reason to take some of that down. It might be an interesting time to be looking at some other names that have rich valuations, like a Tesla or a Beyond Meat to see what those forms look like. But this was as much a market short squeeze in the top 5 names as it was an actual rally. I would point out, a lot of people don't realize how far the S&P and the NASDAQ were outperforming the Dow Jones because of Google and Amazon and Facebook and Apple and Microsoft being such a huge piece of those of S&P and the Dow, and not so much the S&P and the NASDAQ, and not so much the Dow. You've got Apple down 12%, $12, and it's 8% of the NDX. People think that these big indexes are diversified. They have become less so, and that is an important thing to be aware of.
Yeah, a lot to unpack. I like that analogy of the tornado watch or severe thunderstorm watch for the market. That is certainly, I think, where we find ourselves right now. Simon, it's been a little while since you've been on. I'm curious your thoughts here on what we're seeing out here right now in that VIX futures curve. We've talked before about the blip that is the November premium, whether you think that's warranted for the election. And also, as we were just talking about, that front portion of that curve is pretty firmly backward right now. Cash above everything, and the near-term futures above everything else as well. So what are your thoughts on how this curve is shaping up? Are you buying what Mark is putting down there about this is kind of a thunderstorm watch moment for the market here?
Oh, yeah, absolutely. As per my previous comments, I'm consistent with what both he and John have to say. Now, we could be stuck in the muds, and we're kind of rooting for it because it means more action, more interesting things going on. But that's not the case. If you have a look at it, the market has been invulnerable for quite some time, and now we finally have something that could actually lead to something. It may not. At the end of the day, we had lots of scares last year, but this time it seems a little bit. There's more profuse. There's a lot of different things going on. The market continues to rally year over year over year for so long now that eventually you have to have some sort of a washout. I took a look at the Schiller PE ratio recently, and I think there's only 2 times in history where it's been higher than it is today in terms of its price. So what that shows for the listeners who are not familiar with that is just that there's basically stocks are expensive, extremely expensive, and in fact only in the period of the 2000 tech wreck did we see it worse effectively, and probably in 2008 as well. So I think it's a very interesting setup. This curve is just whack. For anybody who wants to see what the VIX and Spike's term structure looks like, on VIXCentral.com is a good place to look at it. It's just remarkable. Obviously October is an important period, but boy, I'm wondering whether or not that's slightly inflated. That bump looks kind of a bit ridiculous to me. For those who don't have it, you go from 18 in September and it's all the way to 20.15 in October, and then all the way back down again the following month. So I don't know. There could be something there to look at potentially. It does seem a bit weird, but I'm not surprised that we've gone into a bit of a backwardation here, because I think that makes perfect sense given what's going on in the cash markets.
Interesting things are afoot out here this week. Let's see what's up in the land of options. We kind of touched on the Spikes futures right now. A lot of people still waiting for that Spikes future to kind of be listed, for a lot of that size to come back in. Spikes land hasn't stopped our 1x2 friend. He's been rolling quite a bit. In fact, he's still the dominant player out there. Let's look at the top positions in Spikes options first. Number 1 with a bullet, still those March 23s, 33,500 of those. Number 2, 16,750 of the March 16s. Number 3, we got 6,000 of the Feb 26s. Number 4, 3,000 of the Feb 17. So I guess the scattered remnants of the 1x2 that are left on still in February. And number 5, around the top 5 here, we got actually looks like July 24 calls, getting some July on the board out here in Spikes. In fact, that's kind of been interesting to me to watch over the course of this past couple of weeks. We've seen interesting little nuggets of retail. I like looking at the big prints, and we look for all that stuff in all the volatility products. But it's interesting to see even today some 1 lots and 3 lots and 5 lots trickling in over there, and even more on the Spikes options, which is kind of interesting, showing some of the retail folks are starting to embrace it and start using it, which is what I consider a sign of something that's growing and healthy indeed out there. That's what you want to see. The big stuff is nice. It's fine. It pays the bills, but you want to get that cachet, that mind share out there with your proverbial grandmother from Iowa, who's hopefully not too busy getting ready to caucus soon out there. And it seems like you're starting to get that mind share. Moving out to the VIX options land out here. It wasn't that busy of a day coming into showtime, only about a 250,000 contracts on the tape, which for VIX isn't a ton. And then it seemed like the warm started turning a little worse. The sell-off started exacerbating a little bit, and now we're seeing more paper on the tape here. We're seeing not quite 500,000, but pretty close to about 462,000 out there in VIX options land. Actually, that's ironically exactly what the ADV is right now as well. The ADV also at 462,000. So that ADV has ticked up a little bit, even though the past week wasn't the most active when it comes to VIX options land. But there were a few highlights, including our old friend, Mr. 50 Cent. He seems to be single-handedly catapulting VIX into a new level here from a overall open interest and volume perspective, at least. Let's break down the top 10, the hot positions out here in VIX options land. Number 10 cost you 153,000 contracts to break into the top 10 in VIX land right now. That'll get you to the Feb 12 half puts. Number 9, 155,000 of the March 28 calls. Number 8, 156,000 of the Feb 13 puts. Number 7, $1.57 of the March 25 calls. Number 6, the Feb 20 calls, 161,000. Number 5, 165,000 of the Feb 15 puts. So getting looks like a pretty even break. So 1, 2, 3, I won't reveal it yet, but a pretty even breakdown between calls and puts. And number 4, 185,000 of the Feb 23 calls. Number 3, $1.94 of the Feb 14 puts. Numero dos here, a little north, I should say, of 250,000, 262,000 of the Feb 25 calls. And number 1 with a bullet this week, 320,000 of the Feb 22 calls. And looks like it's 60-40 calls to puts here in the top 10, which is kind of interesting. Maybe not exactly a sign that there's a consensus out here when it comes to where we're going right now in a vol perspective, or either that or where people were fading it, and then this recent spike has caused some calls to come on in. 6.6 million open on the overall VIX options, about 4.7 million on the calls, and about 1.9 million on the puts. Speaking of calls, how prescient do those 50 cent options look right now? That guy's been gobbling up upside for weeks, and so far it looks like it's been paying off pretty well. Let's see if he's actually been closing it. Let's get into some of that. Let's go back to Monday first and kick things off. Monday was actually the most active day of the week, 661,000 contracts on the tape. Of course, we're coming into the week hot off the heels of more pandemic woe/fears over the weekend, so the market was spooked. We saw volatility printing some decent volume that day. Big print out there, 37,500 of the March 28th, going up for 57.5 cents. So not quite 50 cents, and not quite in the range of 50 cent likes to play, but decent size. Maybe it's 50 cent inspired paper. Maybe we can call it that. Or he is perhaps opening up a little bit richer and a little bit farther out too. That could be a little bit potential for there. Number 2, we saw 20,000 of the March 29s going up for 47.5 cents. We saw those are actually on, looks like they were right off the bid there. So maybe a little bit of premium harvesting going on those bad boys. 19,500, the March 28th, also going for 57.5 cents. Again, a lot of these prints going up late these days in VIX options, which is, I'll have to talk to some of those boys out there. Get these prints up on time so we can see what the heck is actually going on out there. March 13 puts also going up about 18,000 times for 27 cents, kind of mid-market there. And 16,600 of the Feb 23 calls going up for 85 cents, lifting the offer there as well. Going out the Tuesday, a little bit lighter day, but still active, 472,000. The lion's share of the paper that day. People are saying, hey, is 50 Cent taking these off? He's got a nice little pop. He's got what he's been looking for. Is he starting to unwind these? The answer so far, at least, is no. He's putting more on. On Tuesday, put on 90,000 more of the Feb 25s for 49 cents. So he's just adding to his total. The Flow Master was sending it in to me the other day from Trade Alert there, of course. He's been watching and adding up how much of the OI now is just 50 cent out there in VIX options land. And spoiler alert, it's quite a bit. Check out Trade Alerts and Indeed What's Trading over there for all their analysis on all that good stuff. 57,000 also. The March 28th going up for 59 cents near the offer. And we saw the Feb 18s going up 20,000 times. Again, mid-market, and 13,000 of the Feb 24s going up for 61 cents, kind of mid-market there as well. But the big print, clearly almost a quarter of the paper going up in that one massive 90,000 lot of the Feb 25s. Wednesday, pretty light day, a pretty quiet day, a pretty tranquil day. The big print, May 35 is going up for 32.5 cents. All those old fractional prints brings back a smile to my face, the days of eighths and teenies. And 32.5 cents here went up nearly 50,000 times. This was exactly mid-market on these bad boys. Also late. So, again, it's kind of hard to read into the tea leaves. I think some of the brokers are starting to realize they put these up late. It makes it a little harder to interpret what the heck they're actually up to out there. An old trick, but being put to new uses perhaps out there. Also saw a bit of a put vertical / wrong. I'm going to call it more of a vertical. 20,000 of the Feb 13-14 put spread going up for 26 cents. Again, this one also going up late, but it looks like paper may be buying that one. So maybe putting that on initially, not opening on either leg, worth noting as well, because that's hard to tell when there's a lot of OI in VIX land. Kind of hard to see the forest for the trees sometimes. Thursday, another light day, 326,000 contracts. The big prints, 18,000, almost 19,000 of the Feb 12 half puts going up for a whopping nickel. This looks like someone maybe trying to take off some downside risk there. About 12,000 of the March 26 calls going up for 61 cents. Kind of splitting the uprights there. All those prints, I should note, are all late. And then Feb 13.5 puts going up 10,000 times on the bid for 15 cents. And a bit of a Feb call vertical as well. Haven't seen any of these going up in a while, but seeing some going up on Thursday at least. The Feb 25.35 going up 10,000 times for 40 cents out there. Looks like paper probably buying that bad boy. And then coming into today, like I said, it wasn't that active. Starting to light up a little bit now. It was about 250,000 contracts on the tape. Now at about exactly the ADV. 462,000 contracts. The big print coming into Showtime were these funky March 17-26 ratio risk reversal, 17 by 10,000. One of these went up, and then the 2017-25 going up 1,100 by 5,000 times. So someone obviously legging into some upside exposure. Let's see now as the show has progressed a little bit, see if any other large prints have really gone up since we started chatting out here. Looks like 11,000 of the APE 28s going up for 70 cents. Looks like paper kind of splitting the uprights there, and 17,000 of the Feb 14 half puts for 32 cents, kind of splitting the uprights there as well. Those are some of the other big prints going up. Mr. Meatball, it's been kind of a topsy-turvy week from a vol perspective, kind of a weird week from a VIX options perspective as well. How people were thinking maybe 50 Cent would close this week. He didn't. He's doubling down, putting on more. Any interesting prints or trades catching your eye out there this week in VIX options land, sir?
You know, there was that was the 50 Cent trade was the biggest one I saw. Lots of the Feb 22s. Yeah, the biggest trade that I think we've seen in the last few weeks was the Feb 22s when he bought 100 all at once for 100,000 all at once for 48 cents. I think maybe the most interesting thing I've seen besides that, I saw a buyer of the March 35 calls, which was out there. I've seen that was on I believe on Thursday. There was on the Thursday or Wednesday. That was Wednesday. There was a buyer of the May 35 calls tied to futures. We've seen some absolute crash call perspective over the last few weeks. Another fun risk reversal that traded today was the Feb 15.27. A customer sold the 15 put, bought the 27 call, and paid what did he pay? Paid 19 cents 15,000 times. Just tells you that people are out there hedging and putting on positions because the market is saying if you want to hedge, now's the time. And so that is the action we have seen has been pretty furious. I would point out that in both open interest, and I think you talked about this, open interest is up in VIX, and spikes is at, I believe, an all-time high, correct?
59,000, that's pretty close. John, does that qualify for an all-time high out there in OI land from a spikes options perspective, sir?
Yeah, it definitely sounds like that is our top tick for sure.
Interesting. Mark, one of the questions everyone's been asking us, we kind of just touched on it. Some people are surprised 50 Cent isn't closing. Obviously, he has other axes to grind. out there. But are you surprised he hasn't taken any of this paper, at least for any apparent size, off the tape this week?
No. If you understand that he's primarily a credit trader, then the thing to think about is that he is probably hedging off and carrying this against a portfolio that he's carrying on the other side that is likely taking some pain, and he needs these as a hedge. If he's straight up buying these as crash protection, then maybe I'd be surprised. But, let's not forget he's up on these, but it's not like he's made these are wildly profitable. They're up, they're up 100%. His 300, let's say he's got $250,000 on these. He's up 60 cents on these. How much is he really up? He's up, I'm going to do the math right now. He's up, $15 million on those. That's not about, am I telling tales outside of school? I'm going to guess that if he's carrying a bond portfolio, that he's probably wearing close to that much. So this is absolutely meant as a hedge, and he's probably just starting, for him to start taking money off on these, he needs this portfolio, this portfolio of call options, not to double, but to kind of hit that exponential level we get when VIX spikes to 30 and VVIX or the Viking goes to 140. That's really where I think a trader like this is going to start taking dollars. He's not carrying this, in percentage terms. He's made a lot, and in raw dollar figures to a normal person, not John or Simon, but to a normal person like you or me, 15 million might sound like a lot. But, for a true institutional trader, he really needs that exponential explosion. So I would not be surprised if he doesn't start really taking dollars until these things are trading, above $2, maybe even $3 a contract.
Who would know that off the top of his head, of course, is one of the top 300 traders in SIBO history. So, Mark, when you break into that rarefied air, then you'll be able to just throw out those numbers off the top of your head. Speaking of numbers, let's move on to VXX land. Man, what a capricious beast VXX and indeed volatility is. We're just exactly 2 weeks removed from the Jan expiration. Jan, of course, where a lot of people pile into their downside. And we saw so much OI out there on strikes like the 14 puts and others. And it worked out for them this time. Maybe not the 13s, but the 14s it worked out. That was the number one OI position going into expiration. About, I think, 70-odd thousand contracts were open there. It worked out. It was a little dicey. They were kind of pinning there for a little bit, but it worked out. They expired in the money. And then we've said before, though, you got to be prepared for when the worm turns. And just a week or two later, the worm has turned. We're back up to the 16 handle. We were talking before how someone had piled into the 13 puts in Feb. That's still, spoiler alert, the number one position out there in VXX land. And that's not looking good. So if you're just continuing to play just that nothing but downside game in VXX, you got to have something in your back pocket for times like this when things get backward and funky. And so far, it's only been a month of the year so far. We've already seen a lot of crazy events popping off, and it doesn't sound like maybe we've seen the end of this one big one everyone's focused on right now. So interesting stuff. Again, VXX up over 2.5 handles just from our last show. When was the last time we could say that? It's been quite some time. The ADV out there closing in on 300,000 contracts, so it's pretty active out there. And today, over 450,000 contracts are on the tape coming into showtime, so a pretty active day out there. Let's break down the top positions out there really quickly. Number 10 cost you about 28,000 contracts to break into the top 10 of VXX, so things have been pretty active. That gets you to the Feb 14 puts. Again, another bridge. Perhaps we got a whole month, so we'll wait and see. But interesting to see how that is shaping up out there. Number 9, the Jan 18 calls, about almost 30,000 there. Number 8, 34, almost 35,000 of the Feb 12 puts. That's an aggressive one. Number 7, 36,000 of the Jan 16 half calls. Those are looking a lot better than they were, by the way, Jan 31st, so today. So he's going to be have an interesting time going into the close here. So far right now, actually we've seen VXX come off a little bit. It's a little bit shy of 16 right now. It's about 15, almost 15.75. So not looking good for those 16 halves either. Number 6, 43,000 of the Feb 15 calls. Number 5, 46,500 the Feb 28s. That's aggressive. The number 4, 52,000. Now we're getting into some size here. 52,000 of the March 23 calls. Numero trace here, 56,000 of the Feb 24s. Numero dos, I should say, 57,000 of the March 22s. And number 1 with the bullet out here, I kind of gave it away before, 67,000 of the Feb 13 puts. That'll be interesting to see if those bad boys come back into contention by the time of February, or if, as some people have prognosticated, maybe this is a bit of a turning point out here from a vol perspective. Total of about exactly 2 million contracts open out there right now, about 1.3 million on the calls and about 700,000 on the puts. So calls still outpacing puts out there from a VXX perspective. Big print today looks like a funky 6-way. I won't even parse this one. It's all sorts of nonsense out there. Feb 17, 17 halves, March 25s, March 23s, and March 24s, all going up about 6,600 to 5,300 times in various ratios and various spreads. We take a half an hour to parse all that. Instead, let's go back out really quickly. Mr. Meatball, I know your crazies out there in the pitch chat love themselves some VXX. Anything catching their eye out there?
Well, this is really kind of an interesting spot. This is right where VXX starts to have a positive expectancy instead of the normal negative expectancy, right? If you are a VXX trader and you're the type that's like, I love shorting VXX because, it's got that roll yield. Guess what? It doesn't have a quote-unquote roll yield anymore. Roll yield's a thing made up anyway. And so it's now at a position where it theoretically is making money every day and not losing money every day. That's part of the reason why it's probably really active today. It's having one of its busier days in a while. It's traded right now almost 600,000 contracts, so it's doing about double its average daily volume. Interestingly, the biggest trade of the day, though, is the Feb 14.5 puts. Looks like a seller of the 14.5s at 22 cents. Kind of a nice. That's a if you're looking for confidence that we might go higher, that is it. The call volume is really high today. So I'm seeing plenty of action in VXX, and a lot of it is in the stuff expiring today and the stuff expiring next week, and then you get past the regular Feb, and it starts to get a little less interesting. So, a lot of you lovers of short VXX, UVXY, you are not going to be happy if you carry a near dated short position, because truthfully, you don't have any edge to it.
That's the rub out there right now. That's why we always say it's a challenging product. People like to set it and forget it out there, and particularly around this time of year. And that's a challenge right now, as we're seeing out there. Really quickly, we've been talking a lot about pandemics. The show's flying by. Really quickly, Simon, any thoughts here on either VXX or what we're seeing out here in VIX options land this week before we roll on into maybe some quick mail and send the crystal ball, sir?
Hang on to your seats, basically. I think this is potentially very could be turbulent for the market. I mean, the focus obviously is on the coronavirus now and what's going on. That could have some fairly serious ramifications. In general, I think that as far as the impeachment goes, if you look at the up to the minute stuff, I mean, it seems like they're not going to be bringing witnesses in and stuff. So that maybe, that will sort of move into the background, I think, a little bit, at least from my point of view. I think it's focused here on the coronavirus, and as we mentioned earlier, a few of the panelists, that market has been doing very well for quite some time. So this could be the catalyst that sees some genuine sell-off.
We touched last week on the show. Matt was on. He broke down a lot of the earnings vol going on out there. You can check all of those reports, theoptionsinsider.com, for the earnings move results reports. A lot of big names blew the doors off this week. Apple, Amazon, Tesla, you name it. We talked about Apple vol being fairly underpriced last week. Matt joked as soon as he got off the show that vol kind of caught up. So You got to front run the vol views before you talk about it on vol views. Put the trade on because afterwards it's too late. That vol got a little bit richer, maybe a little bit too rich. Because looking here, going into the earnings, it was priced right around $14 on that straddle, and it looks like it delivered about like $7 in the initial blush, and then as the movement of the day wore on, it got up to about 10 handles higher. So you got about $10 out of that straddle. Then of course it sold off again, so you had opportunities to scalp if you had it on for a couple of days and were kind of savvy and aggressive about it. But still, net movement wise, this looks like even though it was cheap, they bid it up, and then once they bid it up, the straddle couldn't live up to what we saw out there in the marketplace. Also has a great breakdown for how the season overall is unfolding compared to previous seasons. The earnings season report, check all that out. TheOptionsInsider.com. You guys have great questions. I don't think we're going to have time to get to those today. There's so much going on in the market, listeners. Blame the pandemic. It's not our fault. As we keep on going into definitely the most challenging segment of the show these days, it's the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This one's been challenging. I kicked off the year with an almost scary bullseye. And ever since then, these coronavirus fears have been kind of gumming up the works for all of us. We've been trying to pick when maybe to fade it or whether we should fade it, whether how much of a degree of a bid to put in if we're not fading it, and all of that has been very challenging. Coming into the tail end of the show here, we're seeing spikes at about an 1870 or so, 1868. We're seeing VIX cash right around a similar level, right around 1875 or so out there. So, spoiler alert, none of us were winning. The meatball was about 6 handles away exactly. I was about 6 1/4 handles away. And Matt, who was feeling the most vol, Matt from ORAS last week, he was feeling only a 14. It's funny, he came on the Advisor show with me a couple of days later, last Tuesday. Check that out, listeners. It's hitting the network as we speak. And he sounds like his vol models had changed a little bit, even since Friday. And he was saying that he thinks maybe this has some legs to it. He thinks this actually could be the real thing. He kind of termed it, maybe this is potentially a volatility regime change out there. So it sounds like if he had a couple more days, he would have definitely juiced up his vol picks. 14 ain't going to cut it today, Mr. Matt. So no winners today, even though Simon might take that as a victory, because we know his definition of victory a little bit looser than the rest of us out here. So no winners for this week, which means, guess what, Simon? As the visiting guest who didn't play last week, so you didn't lose last week, you get to go first, sir. What are you feeling? It's a dubious honor this week, I know, but what are you feeling for this time next week in this crazy backward, crazy coronavirus, crazy impeachment market we find ourselves in today, sir?
Well, given all the stuff that I have said today on the show, it would be remiss of me if I said it was lower, even though, but that's kind of the biased position given what's happened recently in the last few years. So I'm going to go 19 is what I'm going to go. 19 and a half is what I'll go.
19 and a half. So where we are right now, a wee bit more, about a 3/4 of a point premium over there. 19 and a half for Mr. Simon. Mr. Meatball, you also lost last week, but you lost a little bit less than me. So you get to go next, sir. What are you feeling for this time next week?
All right, so I'm going to make 2 predictions. One, we're going to see an actual VIX spike, but I think the high for the VIX for the entire period might be Monday. But that might be 25, 26. So I will be and I'm going to place us 18 and a half, right where we are.
Almost unched, yeah, almost unched from where we are right now, 18 and a half. So interesting. Yeah, that's the challenge about what's going on right now, right? We could have crazy spikes early in the week, and then, of course, we do have some micro things still popping off. As John alluded to at the top of the show, there is that impeachment delta lurking out there. That could kick in, and all of a sudden, who knows what that could. Of course, we have Iowa looming as well. If some of these, shall we say, less market-friendly candidates seem to be moving into the lead, then that could, of course, exacerbate things. So a lot of known unknowns, I should say, lurking out there coming into next week, which makes all this that much more challenging. I say all that to buy myself some time, listeners. So we got 19 and a half on Simon, 18 and a half on Mark over there, the Greasy Meatball. I could certainly see what they're putting down here, but I almost have a hard time saying this, but I think we may mitigate a little bit from where we are right now. So I'm going to say almost a point shy of where we are right now. I'm going to say 17 3/4 coming into shows. That makes actually kind of an interesting three-legged market here, listeners. You got me on the downside, 17.75. You got the Greasy Meatball playing the Goldilocks role in the middle there at an 18.5. And Mr. Simon playing the Russell Rhodes role on the show today, bringing up the top level there with a little bit of the old 19.5 there. What are your thoughts for where we're going to be next week? This is the challenging one. Right in. If you pick it, maybe you win some fabulous prizes, listeners. All right. Unfortunately, that music means we have come to the end. Imagine how quickly an hour flies by when you're talking pandemic vol and impeachment and backwardation and 50 Cent and all the other. We didn't have time to get to your questions. That's how crazy it was today. But keep them coming. We'll try to get to them. No promises, given everything that's popping off right now. But we'll try to get to them next week. Keep them coming. We love to hear from you guys. Maybe we'll try to squeeze some of them onto Option Block and other shows if there's a little bit of time on those. But before we go, they go back around the horn. Let's start in the land of MIAX and the MIAX hot seat. Mr. John, you kind of alluded to us at the top of the show there that you're still in the wait-and-see mode for the Spikes futures. But if folks want to learn more about what's going on in Spikes, maybe they want to stay abreast of the latest developments so they'll know instantly when those futures are back on the market, sir. Where should they go? What should they do?
Yeah, sure. We keep our website and always updated, and www.miaxoptions.com, and we'll be very quick to share the information we can share when we get it. Our ideas are in line with everyone else. We want this thing up and running and trading. In addition to that, we're in the midst of developing and releasing kind of cutting edge functionality for our three exchanges, and all that information is available via our website.
All right, check it out, MIAXoptions.com. Go to the /spikes portion if you want to drill down into Spikes. Listeners, you get a snazzy little video explaining what the heck it is that we're talking about here. Get the nice quotes, get all the data, get the press releases so you'll know second that the futures are going to be back on the market, all that other good stuff, including a link to a little fun show you may like called Volatility Views. Check out that page, MIAXoptions.com/spikes. And Mr. Simon, I think once again this week, I may have invoked your milkshake index on a different show. I think it was in response to a listener question. So clearly the cachet for dairy is growing, sir. If folks want to learn more about that, or maybe they have a question about the Spikes mechanics, and we talked in the past about the dividend and how you use some of the different weekly SPY and how that may impact the calculation. If folks want to learn more, maybe reach out to you with a question, where should they go? What should they do?
Well, they're very welcome to come and see us on t3index.com. Just a bit of a spoiler alert, we're going to be putting on the website pretty shortly a sort of buy right and a put right index that uses Spikes to make some determinations on that, and it outperforms pretty much all of the existing such strategies that there are. So certainly worth looking at. That should be up in about a week.
I like that. Good stuff. And of course, you're right. You're doing it on an American-style index with some early exercise and some dividends. That should make things a little bit more interesting from a premium harvesting buy right. Check it out over there, t3index.com. Check out the milkshake index and, of course, the bit vol. If you want something of flavor of vol, chances are Simon and his team over there have cooked up something. If you want to see something, reach out to them. Maybe they can put it together for you. And Mr. Meatball, you guys have a lot of stuff popping off over there. You have your Vol Club. You have those sweet, sweet MAGA hats. You have that cool new Vol Clubhouse with the secret handshake. I want to go check it out for myself. If folks want to kick the tires on all this stuff, where should they go? What should they do?
Just go to options.com and check out our blog and read it, and give us your email, and we'll send you. I'm in the middle of writing a new Fear Gauge book, so that'll be good. I'm going to have a Spike section on it, and maybe a little bit on SVIX. So should be, if that thing gets built. So should be fun. Go to option.com and get yourself and read our blog every day.
There you go, optionpit.com. Sign up for the Vol Club. Get that fancy Vega key in the mail. Go open the clubhouse, learn the secret handshake, get your fancy hat. Fun stuff, optionpit.com. I've created a fun image How much of that is real? Go find out for yourself, listeners. OptionPit.com. It's the place to go. And on behalf of the Greasy Meatball and John, one of the top 300 market makers in SIBO history. And, of course, Simon over there at T3 Index, and indeed myself. I want to thank all of you out there for downloading, streaming, subscribing, for sending in questions, for listening live, all the fun stuff that you guys do. Keep it coming. Remember, if you like what you hear, head on over to your platform of choice, leave a little review. 5 stars if you can hang it. If not, hey, do whatever your heart feels like. All that stuff helps new people continue to discover this show. It's a long-running show. A lot of people love it, but more people discover it all the time. That process helps new people find it. So leave a review wherever you can. And, of course, we'll see you back here on Monday for the option block and crypto. And then, of course, back on Thursday for TWIFO and option block again. OPR in there in the weekday as well. And, of course, advisor's option this week. You never know what's going to hit throughout the week. Then, of course, right back here on Friday for more Volatility Views.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.